Good morning, good afternoon, good evening, and welcome to Martyn Lucas Investor Double Earnings. If you're watching me here on the main channel, we're about to cover Alcoa. It starts in 50 minutes. We're just paying close attention and keeping our eye on other stocks we're interested in. We're looking at XRP for a breakout. You can see that on the screen. Over there on the extra channel, you are waiting for a few seconds to go now before we get the build up for Kinder Morgan. So we are doing double earnings this evening. It's a very busy night. It's a very busy month now. We're going to be working 15 hours a day to bring you every earnings. Not every earnings, there are hundreds, but we're going to bring you 4 earnings a day, cover all the stocks that all our members are interested in. Is this live, Az? It absolutely is live. I'm loving it. Love when you say that to me. Month now, we're going to be working 15 hours a day to bring... Okay, I'm just watching what's going on in the extra channel. Yep, that's all working. We've got an army over there now waiting for Kinder Morgan to start. This is Kinder Morgan on the extra channel. Behind the scenes, as you can see, we're watching Kinder there and the overall markets. That's very exciting. So welcome everybody on the extra channel. Here on the main channel, we are covering Alcoa. So we've got about 3 minutes to go before the feed from Kinder Morgan comes through on the extra. Once that does, there'll be a sound check to make sure it works. Once it starts on the extra channel, I will mute myself to you on the extra, and I'll only be talking to everybody here on the main channel as we prepare for Alcoa. But we are also watching other things like XRP waiting for a breakout, the overall markets, which did trim off just after the bell, but that's okay. Not worried about that one tiny bit. So we're coming down to 2 minutes now before we should get Kinder Morgan on the extra give me information, and we'll be loading it up. So wherever you are, tap the like button on the main or the extra. So what I'm going to do now is I'm going to give everyone the link to both. So wherever you are, you can nip it out of both if you want to. So here we go. On extra, I'm just writing this now in the chat. On extra, live now is KMI earnings, or this soon will be. And let me give you the link. It's going to be a fantastic night tonight. I'm very excited about doing double earnings. It stretches your brain to insane levels. There you go. All right. Now I'm going to give everybody on the extra channel the opportunity to tune into Alcoa earnings on the main channel. So for that, I need to switch accounts. It certainly stretches your brain. There's no question about it. On main, it is AA earnings. Make sure I've got the correct link. Yes, I do. Drop that into you. There you go. There, and I'll pin that to the top. Very good. Alcoa has just popped up. Look at that. There you go. This is why we're bringing you latest stocks, new stuff you've never heard before, and very interesting. Let me refresh the screen, see what it says. There's a massive push. 3% just bounced there, and we're waiting for the numbers. We don't have it yet. Good stuff. All right, there you go. So everyone now has the links on both channels, extra and main. I wonder which channel will get the biggest audience tonight. All right, very, very good. I'm loving it, loving it, loving it. Alcoa is up 3.5% now. Kinder Morgan, we're going to keep our eye on that as well. Kinder Morgan is down at the moment. It's down like 3% over the whole day, but just 0.7 in the after hours. Alcoa now is flying. Alcoa is flying. Okay, here comes Kinder Morgan now. This is on the extra channel. We've now got the audio coming through. Let me do a test. Okay, I've just got to do a couple of little things here. There you go. Kinder Morgan is on the screen, folks. We've got that for you now. It's 15 minutes away on the extra channel. So that's all going very, very nicely indeed. Okay, We'll be back to you in a minute as soon as the audio, as the call starts. The call will start in 15 minutes. Over here on Alcoa, we've got plenty of time. We've got 45 minutes before the call starts. So we've got opportunity for live phone-ins, ask questions, whatever you like. All right, so let me do some housework, make sure that we're all good everywhere. Oh, tomorrow, what have we got? Initial jobless claims tomorrow. Crude oil stocks change. We'll be watching the markets. Let me share with you how we're moving from fear into neutral. This is great. Imagine when we go to extreme greed. Bloody hell. So everything is doing great. Everyone's making money. There should be nobody not making money right now. It's really as easy as falling off a log. Alcoa is now up 5.13%. We wanted to cover this and bring something new to you. And this was actually brought to you by a couple of our members. If you are a member of the channel and do a $5 super chat, you can have earnings of your choice, plus promo videos and everything else. So that's what this is all about. On the extra channel, when you're watching me on the extra channel, we are 13 minutes away before your earnings begins. That's Kinder Morgan. On the main channel, we got about 40 minutes. We've got plenty of time here on the main channel. So as you can see there, we've got fear is moving into neutral at the moment. Very, very nice indeed. If anyone needs onboarding, I can do that for you. If anyone needs onboarding, Jerry and Elba are now talking in the extra channel. Sorry, in the what you might call it, Discord. People have been asking after them, so I can tell you now they are fine. Alex Me, I only see is back. Alex Me, how are you? Yes, you are on the extra channel watching KMI. The KMI earnings starts in 12 minutes time. You will hear it directly from KMI themselves in 12 minutes. Stand by. I only see is back. Alex Me, how are you? I'm just checking it, Alex, going, can only see is back. That's absolutely fine. You're on the extra channel behind the scenes, and you're about to hear the Kinder Morgan earnings. So stand by for that. Or here on the main channel, where you see the front of me, we are covering AA stock, which is Alcoa earnings call. So there are two earnings going on at once. So I hope to build a network where we can run every single earnings at once. That's my aim, and I'm sure we'll achieve that at some point. There you go. Let's go through all our positions. Let's see what's going on. It's a busy day today. XRP, we're still waiting for that breakout. We're going to keep our eye on that as well. You can see it on the screen. Anything's possible. If you just tuned in, welcome to everybody. We've got two earnings going on at once. We've now got just 11 minutes to go before Kinder Morgan's earnings begin. So if you're on the extra channel, please tap the like button, share this out. You will be listening into the Kinder Morgan's channel in a few minutes. I'll tell you what I might do, actually. I'll change this. I'll change the look. You're watching me over there at the moment, so let me do something different for you. Right, let me see. I can give you another look. Let's try something different. Let me have a little look. Something a little bit different. Stand by. I've just got an idea. That's not what I want. Hang on a minute. Let me try something else. I'm gonna think of something else that I'm gonna do for tomorrow. I'm just trying to think. How long have I got? Have I got time to do this? Work this out. I'm showing you the back of the studio right now, and I'm just trying to think. I've got a better idea. You know what? I'm going to leave it where it is for now. I'm going to leave where it is for now, and I'm going to build something better for tomorrow. I've got some ideas how to make this even better. So I'm going to leave that for there for now. If you're watching on the extra channel, I'm going to add some extra bits tomorrow. That's why it's called the extra channel, right? Makes sense. Makes sense. Okay. We'll leave it there for now. We've got 8 minutes to go on the extra channel. So stand by for Kinder Morgan. You're going to get the presentation from Kinder Morgan in a few minutes' time. So stand by. I've got 2 Evtol reviews coming out very shortly. I've got the one we recorded last week. I've still not published. It's ready to go. And I'm sure Vaz will remind me what it was. And also I've got Archer, which is our first review to do as soon as we get through all this craziness. A lot of craziness. Okay. The overall market is selling at the moment. 151, just under. XRP hasn't broken out yet. Alcoa's going down. 8 minutes to go, just under 8 minutes to go. If you're watching on the extra channel for Kimi stock, KMI, which is Kinder Morgan earnings. Okay. Stand by for that. Just under. It's exciting, right? A lot going on. Woo! Blimey. It's a lot going on at the moment. EHang, that was the one. Thank you very much indeed. EHang. Yes, EHang, that was right. Kinder Morgan's earnings is 7 minutes away on the extra channel. Stand by for that. I'll bring it to you in 7 minutes. If you've just tuned in, welcome to all of you. Welcome, everybody. That's coming up in a few moments. Tomorrow morning on the main channel, we have Discover. And on the extra channel, we have Union Pacific. If you are a member of our channel and you do $5 Super Chat, you can book any earnings you like. We've already had SoFi, January the 27th. That spot's gone. April the 2nd, we've got people super chatting that far out to book their earnings. That's BlackBerry, April the 2nd. Lots of earnings now booked out. 2 tonight, 2 tomorrow morning. We do have the option of 2 tomorrow night. No one has booked any of those yet. So stand by. We've got now 6 minutes to go before Kinder Morgan starts on the extra channel. And then once Kinder Morgan start on the extra channel, I can then just focus on my attention to everybody on the main channel, because you'll all be just watching and listening in on the extra channel. So you won't need me to say anything anymore. Kinder Morgan going down now. It's missed on earnings. Estimated 33 cents. It's done 32 cents. So it missed on earnings. It is profitable, but it missed on earnings. But the expectation was a lot higher. So this is quite an overreaction, I think, selling off as much as it has. Alcoa, let's have a look on the main channel. We're doing Alcoa, and their stock is bouncing all over the place. You can make a lot of money on earnings calls. And they have beaten on earnings. Expected $1.01, and they're $1.04. They've beaten on earnings. It's their best earnings yet, and they are now profitable. Big night for Alcoa. Very, very nice indeed. We like that one. All right. So 4 minutes to go on the extra channel for Kimi. I keep saying Kimi. It's KMI. I shouldn't say that, really. KMI, which is Kinder Morgan. That starts in just 4 minutes from now. that they of course could be 1 or 2 minutes late. Please do tap the like button wherever you are and consider subscribing to our channels. Remember, they are both different channels. If you're watching the back of me, you're in the extra channel watching Kinder Morgan. If you're watching the front of me, looking at my face, then you are watching the main channel. They are both different, so please subscribe to them both. They are very different channels. We have 3 channels now in our network. The main channel, the investor channel, the extra channel, 24 hours a day, 7 days a week. And we also have the party event channel, Martyn Lucas, all of which are on the homepage of each of the channels, so you know exactly where they all are. Okay, let's have a look. Now then, who's winning tonight? We've got 11 watching and 6 likes on the extra channel. Here on the main channel, we have, hang on, that can't be right. 2,000 already. That can't be right. No, that's not right. We have 64 watching and 14 likes so far. So please do tap the like button. That'd be much appreciated. Right, 3 minutes to go. We're about to start the earnings call on the extra channel. That is Kinder Morgan. Do expect them to be a few minutes late. Most earnings calls are. Very few people go on time. Never known why. You're a big publicly traded company and your investors show up and you go late. I mean, it's weird, isn't it? It is when you think about it. But there it is. Right. 2 minutes to go. Do expect them to be a couple of minutes late. That is normal. If you're watching me on the extra channel, you're watching the back of my head, but I am here. This is live. So the camera's going up and down, and just realised the flags aren't flying. Let me fly the flags. That's my fan got moved. There you go. Now the flags are moving. The purpose of the flags is so you know it's always live. Because the flags are moving. I'm in the studio, and the fan is blowing, which means it's live. Right. 2 minutes to go for Kinder Morgan. Oh, excuse me. 15-hour days, right? Now we're working hard. 1 month of this now. This is the beginning. This is day 1. I'm tired the first day because it's all a bit of a shock. I mean, I work 8-hour days, but now we're going 15-hour days. It'll be like this now for 4 weeks. Then it will calm down again, but you got to cover the earnings, otherwise no one has a clue what's going on. All right. Okay, so here we go. We got 1 minute to go. Expect it to be 1 minute, a few minutes late on the extra channel. We're covering Kinder Morgan. So stand by. I'll be bringing it. Let me go and do an audio check. Here we go. There you go. There's the audio check. I know it's coming through. So that's all good. Here on the main channel, the moment we start Kinder, I can detach from the extra channel and just be driving Good Ship Investor Channel main, so I don't have to work 2. At the moment, I'm working 2. Did you walk today, Martyn? I didn't. I'm starting my walking again tomorrow, Mike, because now I'm working extra hard. I have to build in exercise, as I know you understand that. So going to be walking tomorrow. We're going to be going to bed earlier, getting up earlier, doing more work, but also playing harder as well, as in going to walk. Right, here we go. I'm now going to focus on the extra channel. We are now any second to go. So if you keep hearing the audio coming in, that's me doing that. Okay. On the main channel, you won't hear that. You can just see me down here wondering why I'm over here. I'm over here because I'm preparing the extra channel. I'll be back live with you in a moment. That's why I'm out of focus. So I'm just listening in. Here we go. Okay, that's off and running on the extra channel. We're into Kinder Morgan's earnings. Here on the main channel, we are all set to go, and we are focusing on Alcoa. And we've got a few minutes before this. We've got half an hour before this breaks, so we can do a live phone in.
Hey, thank you, Michelle. And before we begin,
there we go. We can do a live phone in. We can do Q&A. So here on the main channel, we're all good. So what I'd like to do is, I've not had a chance. I know this sounds absolutely ridiculous. I just need to take a quick restroom break. It's been pretty hectic here today. So I'm just going to leave you for just a moment. I'll be back in a moment. If anyone who comes in, could you explain that I'm going for a minute or so break? I'll be back in a couple of minutes. Plenty of time. We can do live phone-ins. We can have a conversation. I can answer all questions. Yeah, you got to get that damn cholesterol down. Yes, I have. At least it's something you enjoy. I enjoy everything in life. I enjoy building stuff, Leston. I enjoy building and growing stuff. All right. I'll see you back in a minute. A couple of minutes. Take a 5-minute break. I'll be back in a minute. Thank you very much. Okay, we're back. Thank you very much indeed for your patience. Over there on the extra channel, we are full blast now into Kinder Morgan earnings. That's going well. Awesome stuff. And here on the main channel, we shall be getting the feed from Alcoa in just about 5 minutes time, and then we can audio check that one before we go there as well. Okay, this is good. Let's see what comments we got. Let's have a look. Too much tea. Tea doesn't do you any harm. Or McDonald's. No, I've cut all that out now. And oh dear. Yeah, okay. Mike, not enough tea when Martyn needs the rest from twice an hour. That is enough tea. There you go. Gotta not get the onions on the McDonald's burgers. I don't do McDonald's anymore. Hardly ever. KRD, analyze Neo, please. I can analyze any stock, but it's a members only perk. There's how you become a member. There's the extra. There's the and Instagram accounts. There's Discord for the training. We cover all the costs. We provide it free. Okay. There's Robinhood free stocks USA. There's Robinhood UK. There's Seeking Alpha and Alpha Spread, so you can get all the software that I use. Let's do the same thing on the extra channel. There's the shop. Okay, that's given everyone the links. You've got everything you need. Exciting evening, right? I'm loving it. Let's check in on the audio from the extra channel.
1% over 2023.
There you go. They're listening into that. It's a good crowd tonight. Brand new stock, brand new company. Never done it before, so you never know. Let's have a look on XRP. What's it doing? Still not breaking out. Nope. Going up and down, ready for a breakout. You see the channel narrowing. It's tightening. That's how we can determine it's preparing for a breakout. Anyway. I'm using Robinhood USA. Didn't see before which link I clicked. I am using Robinhood USA. I didn't see before which link I clicked. Alex, you can have Robinhood USA or Robinhood UK. You can have both. Did you say you were in the UK? You clicked on the USA one. You can, aren't you in the UK as well? You can have both. I've got both. That way you can, if you use my other link for the UK, you can sign out, set up another account, and you can get some more shares. So that's what I do. I have double shares. Oh yeah, I don't miss a trick, mate. I've got USA and UK. If you've got an address in both countries, citizenship in both countries, if you've got, or residency, I should say, national insurance number or it's a social security number, you can have account in both countries. I have both. There you go. Smash that link button, everyone. Thank you, Classic Car Nut. Thank you very much. Right, 20 minutes to go. Alex, yes, haha, but it's okay. I will get the UK as well. Great idea, but yeah. I mean, you might as well. Let me give you the link for that then. There's Robinhood UK. There's the Robinhood UK. Makes sense. You might as well. I have 2 accounts, as I've shown you on the screen. Always have 2. Why not get double earnings? You need a different email, though. Don't use the same email. Whatever you do, use a different email. Obviously, on the US, you gave a social security number. On the UK, you'll give you'll give a national insurance number. Make sure you use your UK address, not your US address, and you'll be good to go. All right, Alcoa. We should be getting the earnings information in a minute. I'm waiting for the call to refresh. Does it 15 minutes before? The call is at 4 o'clock, which is just coming up to 1:45. So I'm waiting for that to refresh. If anyone needs upgrading, I can... Oh, Jerry and Elba. God bless Martyn and Leah and the Lucasade family. I'm honoured to have you all as family members. I thank you for your prayers and wishes. I am blessed with many ways, having Elba as my wife and you all as family. I've been put on warfarin, which is a blood thinner, and I have to wait for the blood clot to dissolve. I miss the family. God's blessing. There we go. Jerry is not doing great, but he's doing better than he was. There you go. Information just coming in from Discord from Jerry and Elba, directly from Jerry. That's nice. Okay, message from Alex. Yeah, perfect. Thank you very much, Martyn. Ready for the Friday party? Oh, this is going to be a tough week. Thursday, tomorrow, 2 days left. I tell you what, this is a week. This is a tiring week. I shall look forward to Saturday morning. What does Alcoa do as a business? Well, there's a good one. Let me tell you, Alcoa is a mining. Is in the mining of bauxite. I think it's bauxite. Bauxite. Also does aluminium. So, yeah, an important one. And we've got 30 seconds and we should be able to refresh the audio feed. Yeah. So let me refresh the screen. We are about to get in the next 15 seconds. Oh, here we go. It's already doing it now. Let me put all my details in. Martyn, yes. Lucas, yes. Martyn at... Got to put all my details in. And here we go. There's the audio. There's the feed. We've now got the next earnings ready to go. We're doing double earnings. We've got earnings on the extra channel, earnings on the main channel. Oh, yeah, rocking and rolling. Glad to hear from you, Jerry. Yes, indeed. We're very pleased to hear from Jerry. Now you know. Love that we hear from Jerry. Give Jerry our well wishes. I will do. Thank you. Glad to hear from Jerry. Martyn Lucas. I hear Robin Hood. I hear your Robin Hood plug. I've been with them for years. I hear your Robin Hood plug, Nathan Corey. I've been with them for years. I hear your... What do you mean? You've heard my Robin Hood plug. I hear your Robin Hood plug. I'm not sure I know what you mean. Nathan, I love it when you learn new songs on Extra. Fleetwood Mac, you can go your own way. Oh yeah, absolutely. I'm going to learn it live on the show. We're going to do a little live learning. Yes. As a US citizen, can I open a UK account? No. As a US citizen, you open a US account If you have a British citizenship or you're a resident, you can open a UK account, but you can only open it unless you have residency in both. You see, I'm a UK citizen, but I'm also a resident of the United States. I've got a green card, I've got an address, I've got a social security number. In England, I've got a national insurance number, I've got an address, I've got a bank account in both countries. You have to have everything twice. You have to be like mental like me. You have to have everything twice. There you go. I'm so glad to hear from Jerry and Elba. Yes, I'm mentioning it, Stacey, because you mentioned it earlier. You were asking the question. I remembered you asking, so I dropped it in so you know. All right? Okay. I think I mentioned it because of you, actually. Could you check your feelings on XRP price now? Could you check your feelings? Paul Hayes, could you check your feelings? What's my feelings? I don't have feelings. I just have information. I don't have any emotion attached to any of these things. I simply have facts, correspondence with people that work there. I talk to project managers. I talk to CEOs. I talk to Wall Street managers. I interview people. I study. I don't have feelings. There's no feelings involved. None whatsoever. No feelings. Anyway, okay. We've got 12 minutes to go before this earnings call starts, and then we'll have double earnings. Woo! Double earnings. So I'm going to go back to the extra channel, and I'm going to have this show that's running right now go to this show live here when it finishes. So redirect, and it'll come back to Alcoa. There you go. Switch account back to investor. 10 minutes to go. Okay, no emotional feelings. Absolutely. No emotional feelings when it comes to investing. You make mistakes if you do that. We're investors, we're not gamblers. We just make calculated decisions. And that's it. Very simple. That's why I'm always making money. 19 trades, 19 wins. Got $260,000 invested now. So yeah, there's no emotion here. There's emotion for you. There's a connection with all of you and caring about what we do here. But when it comes to stock, the stock doesn't care. You own it. We're not joining fan clubs. We're investors. Thank you. You're very welcome. Thanks for clarifying. Sorry for the bad diction. Keyboard. No, don't apologize at all. I'm here to help you. If I don't understand you, that's my weakness, not yours. Just joined. What's your prediction for XRP tonight? I don't have a prediction for XRP tonight. I've got no more information yet, but as soon as I do, I'll bring it to you. We're doing the Alcoa earnings call right now, but we are keeping our eye 24 hours a day, 7 days a week on all of our members' interests. XRP is a big one at the moment. Michael Dawn Johnson, nice to have you here. If you'd like to be a member of the show, there it is. There it is. There's my X, there's my Instagram. 9 minutes to go for our second earnings. On the extra channel right now, we are running an earnings call. Look at this. Pretty good, right? We're doing an earnings call right now on the other channel. This is it. Listen in.
Development, their desire to see American energy do well. I think.
There you go. That's what's happening right now on the extra channel. Here on the main channel, we're about to start Alcoa in 7 minutes from now. Tomorrow morning, we have Discover, and we have on the main channel, and we have Union Pacific on the extra channel. It's all going on. I tell you what, it's all going on. Their call is nearly finished. Their call is going to be finished in a moment. We could have done 2 on the same channel, but you never know how long these are going to last for. Yes, money doesn't care about religion or where you're from. Money go to good investment. That's right. No emotion like Gordon Gekko from Wall Street. If you want a friend, buy a dog. In Martyn's case, it would be a cat. No, listen. Not in my case. I wouldn't have a cat, right? They make too many hairs. I'm not interested in hairs. I haven't got time. I'm an animal respecter. I'm not an animal owner. Not at all. I haven't got time for animals at all. But I respect them and love them, but I just don't want them in my house because they put bloody hairs everywhere and give me stuff to do. I've got enough to do. Leah is the one. Blame Leah. Right? She's the one for the cats, not me. Leah wants a cat. We have a cat. But right now she doesn't. So that's good. Where's XRP headed? XRP, in my opinion, is going to $10. That's our target, our only target. All the people that are coming up with silly numbers, that's silly, but we're okay with $10. Seven minutes ago, before the Alcoa earnings starts, on the extra channel, we're running Kinder Morgan. In the morning, we're doing Discover on the main channel, Union Pacific on the extra channel, followed by opening and closing bell. Tomorrow, we're doing more reviews. The first one right top of the list is Archer. 007 recommends getting a cat. I love it. 007 recommends getting a cat. Well, how about it? That's very funny. Five minutes ago, I have a Russian blue. Oh, yeah, I've heard about those. A Russian blue. Very nice. Very nice. I ain't got time for a bloody cat. I ain't got time for a bloody dog. I ain't got time for a bloody goldfish. So there you go. No messing around. Ain't got time for that. Can you imagine a cat in here? Oh my God, be climbing over everything. Can you imagine it? The studio would be a nightmare for a cat. Oh my God. Well, it'd be a nightmare. It wouldn't be a nightmare for the cat. The cat would bloody love it. But it'd be a bloody nightmare, wouldn't it? Can't be doing that. Five minutes ago, looks like the call on Kinder is coming to an end on the extra channel. Right, let me do a little bit of housework as we wait 5 minutes. Kimmy, I should have done this earlier. Put this on my socials. KMI live now. Live now on YouTube. Join the investors. I should have done this earlier. Been sitting here yabbering on, not paying attention. KMI. Kinder Morgan. I'm tired. I am really looking forward to finishing today. It's been a great day, but I am tired. Got to keep pushing forward though, right? Get so many fake sponsorship stuff. Drives me up the bloody wall. Everybody wants to sponsor the channel. So I say, right, do you want a video call? Oh, no, we can just chat on here for a while. No, if you're a real sponsor, you want to speak to me, right? You want to get it sorted. And you never hear back. There you go. Top tip. Just tell someone they got a call, you want a video call. That shuts them up. They never bother then. I'm just putting on all the social media accounts that I've got. So if you see this pop everywhere, you'll know what it is. Hey. Okay. Let's run a poll on the community page. Community. Is this a buy, hold, oops, daisy, how long have I got now? Hold or sell for you? Okay, image poll, buy, hold, sell or undecided. Doing all the polls now on the different accounts. Right, so it's a buy, hold, sell, undecided. There you go. Okay, there's the poll. Back to X, we can do a poll there as well. 2 minutes to go. I'll just get this finished. Is this a buy, hold, or sell for you? Buy, hold, sell, undecided. 7 days post. Right, we're now going to check back in again. We're going to check back in again now with our Alcoa. They could be starting now, so we want to make sure they haven't started yet. Let's play this. Right, still playing audio. Let me mute you. Right, we're listening in to the earnings call. They're playing music at the moment, so stand by. Any moment now, we'll bring you Alcoa. Expect it to be... they're playing some funny music. Listen to that. Oh, now we've got classic. It's like waiting for the dentist. Yeah, don't normally get that on earnings calls. Very unusual. Anyway, we're listening in to that. Very good. Alcoa, seconds away. They're just playing the audio. Okay, we're just waiting any moment now. I'll start posting the socials now on Alcoa. Da 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 la da 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 da. No one ever uses this. Okay, any moment now. Oh.
Fourth quarter and full year 2024 earnings presentation and conference call. All participants will be in listen-only mode. Should you need assistance, please signal a conference specialist by pressing the star key followed by 0. After today's presentation, there will be an opportunity to ask questions. To ask a question, you may press star, then 1 on your phone. To withdraw your question, please press star, then 2. Please note, this event is being recorded. I would now like to turn the conference over to Louis Langlois, Senior Vice President of Treasury and Capital Markets. Please go ahead.
Thank you, and good day, everyone. I'm joined today by William Oplinger, Alcoa Corporation President and Chief Executive Officer, and Molly Bierman, Executive Vice President and Chief Financial Officer. We will take your questions after comments by Bill and Molly. As a reminder, today's discussion will contain forward-looking statements relating to future events and expectations that are subject to various assumptions and caveats. Factors that may cause the company's actual results to differ materially from these statements are included in today's presentation and in our SEC filings. In addition, we have included some non-GAAP financial measures in this presentation. For historical non-GAAP financial measures, reconciliations to the most directly comparable GAAP financial measures can be found in the appendix to today's presentation. We have not presented quantitative reconciliations of certain forward-looking non-GAAP financial measures for reasons noted on this slide. Any reference in our discussion today to EBITDA means adjusted EBITDA. Finally, as previously announced, the earnings press release and slide presentation are available on our website. Now I'd like to turn over the call to Bill.
Thank you, Louis, and welcome everyone to our fourth quarter 2024 earnings conference call. Today we'll review the substantial progress we made during 2024 on key objectives, the financial results, the market, and our plans to continue to improve and strengthen our company in 2025. Let's start with a recap of 2024. I'm very pleased that we had no fatalities or life-altering injuries and improved our key safety metrics. We successfully operated under our new mine conditions in Western Australia, which included daily observation of our mining and rehabilitation practices by certain regulators. 9 of our 11 smelters increased annual production, with 5 achieving annual production records. On the people side, we onboarded and integrated new talent in several critical roles and promoted a culture that prioritizes high performance and continuous improvement. Commercially, we expanded a number of important customer and supplier relationships and invested in growth CapEx to enhance value-add products needed by our customers to meet their manufacturing and sales objectives. In our Sustana line of products, we announced our first sales of EcoSource non-metallurgical alumina, and our low-carbon Ecolum primary aluminum now makes up half of our sales of metal in Europe. We delivered and exceeded our $645 million profitability improvement program ahead of schedule through initiatives which included savings on raw materials, actions to improve profitability and competitiveness, as well as changes to improve the financial performance of our operating portfolio. In November, we started delevering the company with a repayment of $385 million of debt while maintaining our quarterly dividend. We completed the Alumina Limited acquisition and initiated the sale of our investment in the Martyn joint ventures, valued today at about $1.3 billion. Also in the fourth quarter of 2024, we progressed the cooperation with stakeholders to improve the long-term outlook of our San Ciprián operations. To sum it up, 2024 was a successful year at Alcoa. Now I'll turn it over to Molly to take us through the strong financial results.
Thank you, Bill. Revenue was up 20% sequentially to $3.5 billion. In the alumina segment, third-party revenue increased 45% on higher average realized third-party price and higher shipments. In the aluminum segment, third-party revenue increased 5%, primarily due to the increase in average realized third-party price. Fourth quarter net income attributable to Alcoa was $202 million versus the prior quarter of $90 million, with earnings per common share doubling to 76 cents per share. These results include an additional $82 million restructuring charge for the Kwinana curtailment. During the fourth quarter, we completed the technical evaluation of the water management requirements for the residue areas and to increase the duration of the transition and related equipment costs for ongoing water treatment. On an adjusted basis, the net earnings attributable to Alcoa was $276 million, or $1.04 per share. Adjusted EBITDA increased $222 million to $677 million. Let's look at the key drivers of EBITDA. Fourth quarter adjusted EBITDA reflects higher alumina and aluminum prices, higher shipments, and lower energy costs, partially offset by increased other costs, primarily related to intersegment eliminations. The alumina segment increased $349 million, primarily due to higher alumina prices, higher volume, while all other cost increases were mostly offset by currency gains. The aluminum segment increased slightly with higher metal prices, production cost improvements, and lower energy costs being mostly offset by higher alumina costs. Outside the segments, other corporate costs increased, and the intersegment elimination expense increased as expected, with significantly higher average alumina price requiring more inventory profit elimination. Moving on to cash flow activities for the fourth quarter and full year 2024. We used cash from improved earnings in the fourth quarter, along with cash on the balance sheet, to repay the debt acquired in the Alumina Limited transaction. This repayment was partially offset by increased borrowings under an inventory repurchase program. Working capital improved slightly in the quarter as lower inventories and higher year-end accounts payables offset increased accounts receivables related to higher API and metal prices. For the year, capital expenditures, working capital changes, and environmental and ARO payments continue to be our largest uses of cash. Additionally, in 2024, our restructuring payments included approximately $140 million related to the Kwinana curtailment and approximately $35 million related to our employee commitments in Spain. Next, we'll review the performance on our profitability improvement program. We have already exceeded the $645 million target set for our profitability program, which was generally a two-year program to improve our financial results from full year 2023's low EBITDA of $536 million. Overall, the improvements are evident in our year-over-year bridge by program or location. During the fourth quarter, we added $150 million to the third quarter's year-to-date progress for a total of $675 million. Through December 31st, the company overachieved its $310 million target on raw materials with approximately $385 million in savings. Within our productivity and competitiveness program through December 31st, we implemented actions contributing approximately $80 million of savings and expect to deliver the $100 million run rate target by the end of the first quarter of 2025. We have also progressed our portfolio improvements. To date, Warrick has achieved $45 million of its $60 million target. We also received the final ruling from the U.S. Treasury on the inclusion of direct materials in Section 45X of the IRA program, which adds roughly $15 million in annual credits, or about half of the benefit we had expected. The Alumar smelter restart achieved approximately $105 million on its $75 million target and is currently operating at nearly 85% capacity. The Kwinana curtailment has been slow to deliver savings due to high transition and holding costs, but we will continue to work toward the $70 million improvement target. Moving on to other key financial metrics. The year-to-date return on equity is positive 6.5%. Days working capital decreased 11 days sequentially to 34 days, primarily due to a decrease in inventory days on increased sales. Our fourth quarter dividend added $27 million to stockholder capital returns. Free cash flow plus net non-controlling interest contributions was positive for the quarter, resulting in a cash balance of $1.1 billion. As we look ahead to 2025, continuing to delever and reposition debt to the jurisdictions where cash is needed will be a priority for us. Turning to the outlook for the full year and first quarter of 2025. To be clear, our outlook does not include any estimates for the impacts of potential tariffs. For the full year, we expect alumina production to range between 9.5 and 9.7 million tons, and shipments to range between 13.1 and 13.3 million tons. The difference reflects our normal trading volumes as well as externally sourced alumina. The aluminum segment is expected to produce 2.3 to 2.5 million tons, increasing on smelter restarts, while shipments are expected to range between 2.6 million and 2.8 million tons. In EBITDA items outside the segments, we expect transformation costs to be $75 million, slightly increased from last year and reflecting the work we are doing to accelerate remediation activity in order to take advantage of potential asset monetization opportunities. Other corporate expense will improve to approximately $170 million, reflecting continued efforts to control our overhead costs. Below EBITDA, we expect depreciation to remain at approximately $640 million. Non-operating pension and OPEB expense is expected to be up slightly at $25 million, and interest expense will be $165 million. For cash flow impacts, we expect 2025 pension and OPEB required cash funding to be similar to 2024 at $70 million. The majority of that spend is for the U.S. OPEB plan. Our capital returns to stockholders will continue to be aligned with our capital allocation framework. Our capital expenditure estimate is $700 million, with $625 million in sustaining and $75 million in return seeking. The sustaining capital increase is $185 million over 2024, primarily due to a $70 million increase related to upcoming mine moves in Australia, as well as a number of major projects, including energy transition projects in Djibouti, a new ship unloader in Canada, and upgrades to a bauxite reclaiming system in Australia. We expect return-seeking investments to decrease following our investment in the Brazil bauxite vessels in 2024. However, we continue to identify capacity expansion projects and remain open to fund those requests if they meet return criteria and market conditions allow. We expect approximately $50 million of prior period income tax payments in 2025. That amount is lower than you might expect based on our 2024 higher earnings, primarily due to the utilization of the Alumina Limited carry-forward net operating loss, which saved approximately $70 million on 2024 cash taxes. We have approximately $60 million of tax benefit related to that NOL remaining to use in future periods, subject to annual percentage limitations. Environmental and ARO spending is expected to be similar to 2024 at approximately $240 million. We do not provide guidance on full-year cash restructuring charges, but can share the portion attributable to the Kwinana curtailment. Approximately $140 million remain to be spent from the Kwinana restructuring reserve, with a large majority of that to be dispersed in 2025. For the first quarter of 2025 at the segment level, in alumina, we expect performance to be favorable by approximately $30 million due to the non-recurring inventory adjustment recorded in the fourth quarter, partially offset by typical first quarter impacts from the beginning of maintenance cycles and lower shipping volumes. In the aluminum segment, we expect performance to be unfavorable by approximately $60 million due to the non-recurring IRA Section 45 true-up benefit recorded in the fourth quarter, lower seasonal pricing at the Brazil hydroelectric facilities, and the absence of modern offtake shipping volumes in accordance with the terms of the announced transaction. While the higher average price of alumina will increase overall Alcoa adjusted EBITDA, alumina cost in the aluminum segment is expected to be unfavorable by approximately $90 million. Beyond the standard sensitivity provided for intersegment profit elimination, we anticipate an additional $20 million of income in the first quarter of 2025 due to the lower profit retained in inventory related to changes in production costs and volumes. Below EBITDA, within other expenses, contributions to ELYSIS in the first quarter of 2025 are expected to increase by $25 million, which triggers loss recognition. The fourth quarter of 2024 included negative impacts of $50 million due to foreign currency losses, which may not recur. Based on last week's pricing, we expect the first quarter of 2025 operational tax expense to approximate $120 to $130 million. Note that the fourth quarter 2024 tax provision included a $55 million catch-up expense. Our sensitivities have been updated for our view of 2025. Please note that we revised our regional premium distribution due to the increase in the Alumar smelter shipments. Our pricing in Brazil is based on both index and fixed pricing. As a proxy for the average result of that pricing scheme, we see a high correlation to the Midwest duty unpaid index and suggest using that index for your models. Lastly, we have a new disclosure in the appendix. At the request of our stockholders, particularly those in Australia, where per unit disclosures are widely available, we are now including cost per unit measures for the alumina and aluminum segments as a whole for your reference. Now I'll turn it back to Bill.
Thanks, Molly. We expect to maintain our fast pace in 2025. Let's cover some of our key areas of focus in 2025. We want a step change in safety. We've made great progress in the last 2 years, but we want more. We see a direct correlation between safety and operational stability. We're continuing our pursuit of operational excellence, supported by the modernization of the Alcoa
Rivera
business
has
system,
become a member,
and with particular attention on improving the performance of our Brazilian operations. Progressing our mining approvals in Australia remains
Silver, stand by
important.
to the end. I can upgrade your account.
We expect to raise the bar on commercial excellence through customer-focused decisions. We want to be positioned as the supplier of choice for customers in terms of product quality, innovation, sustainability, and security of supply. We plan to pursue targeted areas for growth via organic and inorganic opportunities. We will do that where returns exceed the cost of capital and deliver value to our shareholders. We are progressing our work on San Ciprián and expect to execute the first steps in 2025. Lastly, on capital allocation, delevering and repositioning debt are a priority for us. Assuming prices retain their strength, we expect to generate sufficient cash to enable.
Thank you ever so much, everybody on the extra channel watching Kinder Morgan. Stay where you are. Click the link in the chat. Now join us on the main channel for Alcoa. Thank you.
In alumina, prices reached an all-time high in the fourth quarter as a result of a tight market on lower than expected supply. In Guinea, a force majeure on bauxite exports to China from a major player and protests in the Bauxite region all impacted the flow of bauxite exports. This is particularly relevant to the Chinese market that was already facing tight bauxite supply due to lower local production related to safety and environmental inspections at mines in northern China. Meanwhile, demand remains strong from smelters, resulting in low stocks available in the alumina spot market, creating competition for alumina cargoes and increasing the cost to smelters. Looking ahead to 2025, in order for the alumina market to come back to balance, several ramp-up and new projects in China, Indonesia, and India must complete as planned. Also, bauxite availability is key to keeping refining projects in India and China on track. In aluminum, global demand remained resilient in the fourth quarter. European and North American demand continues to be supported by the packaging and electrical sectors, while building and construction and automotive remain challenged. For building and construction specifically, prior interest rate cuts in Europe and in the U.S. are likely to provide support for recovery. In China, growth in all end uses, with the exception of building and construction, led to strong primary aluminum demand growth in 2024. The increase in alumina price has outweighed the increase in aluminum price and resulted in tighter margins for smelters exposed to spot price. Announced smelter curtailments in Russia, front-loaded maintenance at smelters in China, together with delayed ramp-ups in Indonesia, have tightened global aluminum supply. For 2025, aluminum demand outside China is expected to rebound, with North America and Europe supported by higher real incomes and lower average interest rates year over year. Limited supply growth is expected globally in 2025, following recent curtailments and delayed ramp-ups, supported by China approaching the 45 million metric ton capacity cap. And of course, there is uncertainty related to the impact of any new U.S. tariffs, which could have wide-ranging effects on supply, demand, and trade flows. When we speak of the possibility of changing trade flows, it is important to point out Alcoa's competitive advantage as a vertically integrated primary aluminum player from mine to metal, with bauxite mines, aluminum refineries, and aluminum smelters and casthouses located across the world. This positioning gives Alcoa the ability to maneuver and respond to challenging and changing market and policy conditions. As I mentioned earlier, the tight supply in 2024 in bauxite and alumina caused alumina prices to rise to all-time highs, and some smelters had to cut production or delay ramp-ups. Our global network of mines and refineries enabled us to navigate these market conditions without significant operational issues while benefiting from the elevated alumina price. In aluminum, Alcoa has close proximity to customers in North America and Europe, with smelters across the U.S., Canada, and Europe. For both alumina and aluminum products, our customers value the security that comes with Alcoa-sourced products. They appreciate our close proximity, reliable delivery performance, as well as a variety of mature and stable transportation choices. Alcoa prides itself on offering high-quality products across the value chain and continuing to innovate our products to meet customer needs, including low-carbon solutions. When you transition from Alcoa's global footprint to look at the primary aluminum supply flows into the United States, you can see the U.S. currently has a significant inflow from Canada. The current discussions and proposals on tariffs by the U.S. government may have significant impacts on how metal is flowing from one country to another. Currently, the U.S. imports two-thirds of its primary aluminum from Canada. This was true both before and after the Section 232 tariffs on aluminum implemented by President Trump in his first term, who also granted an exemption to the tariffs for Canada and select other countries. If there were to be tariffs on Canadian aluminum imports to the U.S., this would represent a threat to U.S. industrial competitiveness. A 25% tariff on current Canadian export volume to the U.S. could represent $1.5 to $2 billion of additional annual cost for U.S. customers. In addition, increasing costs on trade with Canada and Mexico would particularly hurt the U.S. transportation supply chain, the largest end market in North America, and specifically the automotive market. Trade flows would likely be impacted such that U.S. aluminum imports would increase from countries and regions that have a lower import duty level, like the Middle East and India, while Canadian metal could reroute to Europe and other countries. In Alcoa's case, we could reroute supply from our Canadian smelters to Europe. While it is an advantage to have this optionality, it certainly is not a benefit for our customers as supply chains lengthen. That said, Alcoa is a 135-year-old global company which operates in markets all over the world and has worked with governments on many topics throughout our history. If the U.S. government decides to implement new tariffs for strategic purposes, we will work with the administration to protect Alcoa's interests. Let's move on to talk about our work in Spain. We just announced further progress
on
with
Friday.
Our San Cyprian stakeholders. Alcoa Innispal, Ignis EQT, the Spanish national and Junta regional governments have entered into a memorandum of understanding to work cooperatively toward improving the long-term outlook for the complex. There are 4 key elements of the MOU, which include cooperation from the parties. First, support by the governments for our dialogue with San Cyprian workers to prioritize restarting the smelter over capital investments that can be deferred to a later date. Second, streamline the authorization of renewable energy projects and deploy policies to achieve competitive energy costs. Third, provide materially higher CO2 compensation support. We've already seen the Spanish national government increase the CO2 compensation program budget, which will provide meaningful support when the San Cyprian smelter reaches full capacity. Last, support the approval by the regional government of the residue storage area capital projects, which are needed to maintain production in the refinery. We expect to use the momentum created by the MOU to continue advancing these key areas of cooperation, as well as the remaining conditions, including energy supply contracts. Additionally, Alcoa Innisfal and Ignis EQT are working to finalize the partnership agreement. We are working to complete these steps as early as possible in the first quarter of 2025. As a company, we are proud of the progress we have made in the fourth quarter and in 2024 on multiple fronts. Looking ahead, we plan to maintain a fast pace of execution on our 2025 key areas of focus and strategic initiatives, improve the competitiveness of our operations, and capitalize on strong market fundamentals to deliver value to our stockholders. Operator, let's start the question and answer portion of the session.
Please tap the like button, folks.
The question and answer session.
And
to
consider subscribing to our channel. Thank you.
Star, then 1 on your phone. If you are using a speakerphone, please pick up your handset before pressing the keys. To withdraw your question, please press star, then 2. When called upon, please limit yourself to 2 questions. The first question is from Katja Jancic with BMO Capital Markets. Please go ahead.
Hi, thanks for taking my questions. Maybe starting on tariffs. Bill, you mentioned if there are 25% tariffs on Canada, you would potentially divert that volume to European market. Where do you think the Midwest premium could actually go if we do start seeing that volume being directed and U.S. would still have to attract the volume from somewhere else?
Yeah, Katja, the Midwest premium we think will go substantially higher. I don't have a number in front of me on what we think it'll end up at, but it will go substantially higher in order to attract volumes into the U.S. Ultimately, if there's a differential between Canadian and non-Canadian metal, you're going to see trade flows disrupted such a way that us and other suppliers most likely will ship from Canadian metal into Europe, and you'll see Middle Eastern metal and potentially Indian metal coming into North America because there would potentially be a 15% trade differential. Literally, you'd see ships passing in the Atlantic carrying the exact same product back and forth, and it just doesn't make a lot of sense. And so that's why we've shown the chart that we showed.
And then maybe just for Alcoa specifically, would the increase in Midwest premium and your U.S. operation be enough to offset the negative impact from tariffs?
So remember the differential between the size of production in the U.S. versus the size of production in Canada. We have roughly 900,000 metric tons in Canada and operating in the U.S. roughly 300,000 metric tons. So the differential would not offset. Now, before we speculate too much, the tariff structure hasn't been set. We have been appreciative of the U.S. government taking the time to think through these tariffs. And we'll wait and see what it brings and then give you a view of the outlook at that point.
Okay, thank you. I'll hop back into the queue.
Thanks.
The next question is from Lawson Winder with Bank of America Securities. Please go ahead.
Thank you, operator, and good evening, Bill and Molly. Very nice to hear from you both, and nice work on a solid 24. If I could, I'd like to ask about your net debt position. Nice to see it fall during the quarter. Bill, I know you haven't done this in the recent past, but would you feel that you might be able to, in a position today, provide some sort of clarity on a net debt target for Alcoa? And then how do you think about the Martyn equity position, and how does that factor into your thinking? And I'm coming from the point of view just to try to gauge the timing of when Alcoa might consider some sort of potential increase in capital return.
Lawson, I'll take the first part on our net debt target. We no longer have a stated net debt target. However, we are currently higher than we've been in the last 3 years. We closed the year at 2.1 in adjusted net debt. If you recall back to 2021 and 22, we were right around $1 billion in adjusted net debt, and that was certainly a more comfortable level for us. We will have delevering as well as repositioning debt as a priority in 2025. If we find, though, that we have excess cash after maintaining our strong balance sheet and funding our operations to sustain them, we will look at our capital allocation framework and we'll look at shareholder returns, positioning for growth, as well as any further portfolio actions that we need to take.
And when we consider the Martyn transaction, it's important to remember that we've announced it, but we haven't closed it. We anticipate that it'll be closed in the first half of this year. The value on the day that we announced the transaction was roughly $1.1 billion. Subsequent to that time, the Martyn shares have increased, so the value is more like $1.3 billion. We're very focused on getting that transaction closed. Recall that it has a lockup period of roughly a third, 3 years, 4 years, and 5 years. And so over that time period, we'll consider what we do with those shares. But there is a lockup period, so we'll have some time before we potentially recognize that value.
Okay, very helpful. Thank you for those comments. If I could actually jump to the bauxite market and just you provided some commentary and it's helpful. I mean, it sounded kind of I guess as a bit of a warning about to some of these aluminum refineries that are ramping up. I mean, what are you hearing from your third-party customers in terms of bauxite availability? I mean, do you have a sense that there is sufficient bauxite capacity in 2025 to see some of these new refineries, and particularly in India and China, ramp up?
So the bauxite market currently is very tight. We see bauxite pricing into China at $120, $130 per ton, probably the highest bauxite's ever been. When a coastal refinery in China is looking at restarting, if they're using imported bauxite, their bauxite cost alone is somewhere between $250 and $300 per ton. So the market is tight, and it's tight for the reasons that we discussed in the prepared remarks. And that has a flow-on impact on the alumina market. When we look at the alumina market, we think that alumina will remain tight, we believe, through the first half. Don't know what will happen after that. In order for the alumina market to loosen up, we need to see production coming online in India, Indonesia. But with a tight bauxite market and an expensive bauxite market, that pressures the alumina market further.
Okay. Thanks for your comments. Much appreciated.
Good.
The next question is from Daniel Major with UBS. Please go ahead.
Hi there. Can you hear me okay?
Yes, we can.
Yes, hi, Daniel.
Great, thanks. Two questions. The first one just on San Ciprián, I guess, good progress with the memorandum of understanding, a couple of components. Can you confirm what the cash balance is at the end of the year at San Ciprián, and any updated projection based on kind of market prices as to when effectively that will run out of cash? And it's the memorandum of understanding, and I guess it's encouraging, but it doesn't guarantee that a deal will be reached. Is that way of thinking about it?
Yeah, I'll take the first part on the cash balance. So with recently high API prices, that has reduced our net cash consumption, but cash is still depleting weekly. And so we do have a sense of urgency to complete our discussions and negotiations, primarily with the unions on the release of the restricted cash and with the energy suppliers on viable contracts. The decision for us to proceed with the JV formation and initial investments that would be made by Alcoa and our partner Ignis will be based on the certainty that we have on each of the remaining items.
And as far as the MOU goes, we think the MOU is a step forward for the long-term viability of the site. The MOU provides essentially four things, as I outlined in my prepared remarks. Both the national and the regional government are supportive of prioritizing the smelter restart over the capital investments. They're supportive of streamlining the authorization of renewable energy projects, specifically wind farms. They're providing their support for materially higher CO2 compensation support. That's a big deal. Back in December 13th, they talked about doubling compensation for CO2. that supports the long-term viability of the site. And then lastly, we need, not least important, but we need support on approval of the residue storage area uplift. With that said, Daniel, we continue to plan for the ramp up of the smelter, but at this point, it can't be guaranteed. As we mentioned earlier, we still have several key pieces that need to fall in place. Currently, the smelter is not viable, so ramping up production will accelerate the consumption of cash that Molly talked about from the proposed investment that must be preserved to support the long-term viability of the operations. We also need to hear from the Works Council on releasing the restricted cash. So the MOU is a step forward, but it doesn't necessarily guarantee the restart of the smelter.
Very good. Thank you. And then second part of the question, lots of excitement around monetizing excess energy offtake that you have to feed the AI data center dynamic. Can you provide us with any numbers around megawatts of potential excess capacity and any steer around the upside to there?
So you were breaking up on us, but I think the question that you were asking was that do we have excess energy that we can monetize around the world? We have 4 positions down in Brazil that are part ownership in hydros that we sell into the marketplace there. We saw the benefit of some higher pricing in the fourth quarter versus the third quarter, so that's a positive. That will fluctuate depending on what the rainfall essentially looks like and what the energy prices look like down in Brazil. The other place that we could potentially monetize energy is in Warwick, but Warwick's coal-fired power plant, and currently we're using that energy to run the smelting. But those are really the 2 areas that we could monetize energy other than making it into aluminum.
Okay, thank you. I'll go back to you.
Thank you.
The next question is from Carlos de Alba with Morgan Stanley. Please go ahead.
Thank you very much. Hello, Molly and Bill. So maybe similar vein of the last question, but maybe slightly different. What is the opportunity that Alcoa has to potentially monetize idle sites, given the interest from data centers on that type of assets?
Thanks for the question, Carlos. And, we actually have a history of monetizing legacy assets that has generated significant value over time. And so while others may talk about it, we have actually done it. So, for instance, in Texas, if you remember the Rockdale site, I believe we sold it for right around $270 million a number of years ago, and that has subsequently been redeveloped into certain areas. Again, we were able to monetize it and make good money. In advance of that, I should say after that, we sold the Intalco site for $100 million. That ultimately went to a data center developer, and it was long before this craze around AI and data centers, and we were able to monetize $100 million there. We have a number of sites around the country and around the world that are uniquely positioned to be able to take advantage of both the data center and the AI situation. Why do I say they're uniquely positioned? They have generally energy connections that are able to bring energy in. So when I look at it, there are places like Wenatchee, Messina East. The one that's probably the most valuable is Point Comfort because it has access to a port. Globally, we have Point Henry, which is a site that in Australia. So while I'm not willing to put a value on it, you see our track record before the real craze around AI and data centers of multi-$100 million sales generations from these sites.
Thanks, Bill. And maybe just a follow-up on that one. Is there any timetable? And you were focused obviously last year on closing the Alumina Limited. You have been making progress in San Ciprián. That it's an ongoing effort. But do you have now this potential monetization of legacy assets in your agenda for the coming months, quarters? Any color as to when exactly where the company is potentially in this process and where we could see some benefits?
No, and the reason why I say no, Carlos, is because these things take time, and I want maximum value. We're not in a position where we need to do a fire sale on any of these assets. So if you recall the saga of Rockdale from a number of years ago, we had offers in Rockdale that were as small as $40 million, and we held out for maximum value that was, again, my recollection was greater than $250 million. So I'm not going to lay out a timetable. We have assets that we can monetize. In the case of something like Point Comfort, we're going through the demolition. We're going to make sure that we get maximum value out of these sites. So we're not in a rush to sell, but it is actually a good market right now. So we'll let you know.
Fair enough. And I'm going to cheat a little bit since there was technically one question. If I may just ask on San Ciprián. So if all these efforts that you are putting into restarting the asset and reaching a viable agreement don't work, don't play out, what would be like sort of maybe a range of the worst case for Alcoa and Alcoa shareholders? How much money you would potentially lose or cash that would be stranded in the country. If you can provide some color or framework around that would be useful. Thank you very much.
So, Carlos, before Molly gives you some numbers, I will caution you that I don't want to speculate on the potential outcome here. We are focused on making San Ciprián a viable site. We just announced significant support that we're really pleased with from both the national and the regional government. So we are focused on making that a viable site for the long term. That's our priority outcome. However, Molly can give you some numbers around potential curtailment or closure costs.
So, Carlos, these haven't updated from the last time. They remain the same. On the smelter, without severance, we're looking at $40 to $50 million in cash closure costs. On the refinery, again, without severance, we're about $200 million, but that does include about $80 million in the CapEx for the residue storage area. We're actually going to go ahead and do that work now. That will be needed whether we're running or closing. And in a closure scenario, again, we're not there, but we would be paying out those funds that I just spoke about over 5 to 7 years.
Absolutely. Thank you. Thank you, Molly.
Thanks, Carlos.
The next question is from Nick Giles with B. Riley Securities. Please go ahead.
Thank you very much, operator, and good afternoon, everyone. Congrats on a really nice quarter here. I just wanted to follow up on some of your legacy power assets. What have conversations looked like to date? Have you been approached by any hyperscalers or similar data center developers, or is due diligence really just on Alcoa's end at this stage?
Nick, we are in constant contact with developers on all of these sites. And it takes time. And it takes a lot of work with various groups. These are generally not, the landscape has changed a little bit with some of the hyperscalers, but historically these are generally not well-capitalized firms, so you go through a lot of process and ultimately find out that they don't have the money to be able to do it. But that's what we've done in places like Rockdale and in Talco. So we are in contact with folks and trying to move forward for the best value for our shareholders.
Well, Bill, I think it's safe to say everyone will be a little better capitalized after the Stargate announcement last night. My next question was, first of all, congratulations on the execution of the profitability improvement program. I was wondering if you could provide an update on your productivity and competitiveness program. I think you had reached $45 million as of Q3. Should we still think about you exiting 1Q at the $100 million run rate? Thanks very much.
Yeah. Yes, by that point, we'll have executed all the actions to hit the $100 million run rate. We actually put all of the productivity initiatives into our 2025 plan. Well, I know externally that you guys like these profitability programs. Internally, they're actually hard to measure and hold accountable. So we took the step of building all of our improvements into our plan. That way we can track it by operation, by department, and know who's accountable. So we're feeling good about going into 2025 with all of those actions locked down and accounted in the plan.
Bill and Molly, thank you so much for all the color and continued best of luck.
Thank you.
Thank you.
The next question is from Chris LaFemina with Jefferies. Please go ahead.
Thanks, operator. Hi, Bill and Molly. Thanks for taking my question. I was going to ask about CapEx, but first just onto that profitability improvement program. Molly, you mentioned that it's hard to monitor that stuff internally. Well, it's also hard for us to monitor it externally. So if we look at what you've delivered there, and we assume you get the full benefit from the Kwinana curtailment, we assume you get the full benefit of the productivity and competitiveness program that you just spoke about, we assume you get the full benefit of the work optimization. That would imply like $750 million in total benefits. And I think you did about $530 million roughly of EBITDA in 2023 before this program was implemented. So does that mean effectively that if we go back to a 2023 commodity price environment, EBITDA, instead of being $530 million, would be $750 more than that? So it's more like $1.3 billion in that sort of price environment. Is that the way we should think about that program in terms of modeling it going forward?
I hear what you're saying, Chris, but I kind of focus on the performance side of it. So if you look at the numbers that we've listed in the chart on the progress that we've made, if you look at the year-over-year bridge, which is in the back of your appendix, you'll see that our initiatives have generated about $625 million of productivity that's showing up in the 23 to 24 bridge. That's on top of the market improvements of $740 million. So when you look at the deltas, we do have about $50 million of headwinds related to lower value-add product premiums and about $250 million in other headwinds related to inflation and costs outside the program. So we have a net delivery that's very apparent in the bridge of over $300 million.
And that's the beauty of that bridge, right? There's puts and takes. We have a massive effort in place to continuously improve the company, but the bridge spells out exactly what we ended up getting, and so it bridges the earnings to earnings, and it's pretty clear there.
That's helpful, thank you. And then secondly, just on CapEx, so your 2025 CapEx guidance is probably a little bit higher than I think many in the market had expected, and Bill, you mentioned that there's some substantial projects that are contributing to the high sustaining CapEx for 2025, and it's up nearly $200 million versus 2024. How do we think about where that trends after 2025? So is it going to be a big lump of CapEx in 2025 and then it reverts back to some more normalized level in 2026? And then what is that more normalized level? How should we think about CapEx kind of through the cycle? Where should it be aside from your growth?
So Chris, let me take this one. There's a couple moving components because of the changes between sustaining and return seeking. But if you think in 2024, we were guiding to about $600 million in expected CapEx. We did underspend that a bit. However, we're thinking of it as going from 600 up to 700. And we had been guiding that we would add at least 50 million the next 2 years related to the mine moves. As it turns out, we're adding 70 in 25. I don't yet have the number for 26 on the mine moves, but you can expect that that will be significant. The mine moves will take 3-ish years to complete, so we would be elevated during that time.
Okay, so that's 70 of the, I think you said 185 increase, right? Is the other 115 all kind of one-off 2025 items that we should expect to reverse in 2026, or are they just, I mean, I understand there's a lot of moving parts, just trying to think about where that might go, even with the mine CapEx that you're spending.
Yeah, we have some opportunities with sustaining CapEx now to really improve our business. If you look at the projects that we mentioned, Juruti is going through an energy transition. We're connecting them to the grid there. We have a new ship unloader going in Canada. That's significant expense. And then we also have a bauxite reclaimer in Western Australia. So maybe it's timing, but we absolutely have an opportunity now to really improve the business. And so we are, while we have the cash available, we are going to put it into the business.
Great. Thank you for that. Good luck.
Thank you.
The next question is from Michael Dudas with Vertical Research. Please go ahead.
Good evening, gentlemen. Molly.
Hey, Michael.
Bill, as you put forth your outlook for 2025 with regard to volumes and shipments, et cetera, maybe you could share, like, are you anticipating in the cycle, tariffs aside, a recovery year, a more normalized year? Like, what's the sense from the client base and what you're seeing about on the demand front, where the cycle might be here as we move forward, just from the overall outlook for, say, the aluminum industry?
So let me start with aluminum, and we'll just briefly hit on alumina and bauxite. But as we look forward on aluminum, we are seeing global demand growth at roughly 2% on a growth on a year-over-year basis. That breaks down roughly of rest of world of 3% and China at approximately 1%. Now, I'm rounding these numbers a little bit from the exact numbers, but it gives you an indication of what type of growth that we're seeing. Rest of world growth is actually pretty strong. China growth at 1% is historically low, but we'll see whether China takes any action around stimulus. And to me, potentially that's upside. Then if I look at the rest of the world demand picture, and we go kind of end market by end market, we continue to see demand strength in packaging. We continue to see demand strength in electrical conductor and electrical distribution. The automotive space is a little bit mixed. We are seeing strength in North America with a little bit of weakness in Europe. And then building and construction, which is the largest demand driver globally for aluminum, is still fairly weak. And building construction will be based on what happens with interest rates. And, I know a lot of people were anticipating that interest rates would be lower in 2025. Just from the mathematics perspective, it looks like it'll be on average a little bit lower unless rates go higher from here. And we think that potentially offers some upside on the demand side. So that's the markets.
I appreciate that's very helpful, Bill. And then maybe just to follow up, do you think the market, as you're seeing, as you're getting ready for it, or you think the market's expecting the tariffs that we're anticipating? Do you see sense of that from the client base, market indices, how you're thinking about this, and how quickly or how rapidly can the industry kind of adjust to these dynamics, since they seem to be happening at a pretty breakneck speed here as we start the new administration?
So I'm going to give you a little bit of a non-answer, and it's just because there's not a lot of clarity around what the market is expecting. You look at the Midwest premium in the U.S., it has gone from something like 18 cents in November, December timeframe to 24 cents today. So is it anticipating some type of tariff? It may be anticipating some type of tariff. What it's not anticipating is a 25% tariff. That would have a massive step up in overall Midwest premium. So our customers, and it's a question that Molly and I were just talking with our commercial team over the last couple of days, our customers are in the same spot we're in. They don't know what to do as far as tariffs. They're not necessarily doing significant repositioning of metal because they just simply don't know. So we'll wait to see what comes of it. As far as how quickly things will turn, once the tariffs go into place, you will, I believe, immediately see a bump up in the Midwest premium as soon as the tariffs take effect. And then over time, metal will flow, and we think it'll take, 1 to 2 quarters, that it'll take time for metal to flow out of other regions if there is a tariff differential. So we're speaking about a situation where Canada has a 25% tariff and the rest of the world has a 10% tariff. we will see trade flows over the course of, let's say, half of a year have significant impacts, but it'll start immediately.
Bill, that was a great non-answer. I appreciate it.
Thanks.
The next question is from Timna Tanners with Wolfe Research. Please go ahead.
Hey, team. Thanks for taking my question. Wanted to expand a little bit. I know you talked about uses of cash, debt pay down's a priority, but you did allude to some expansions. And I know you've talked in the past about opportunity to revisit Warwick or Listey and others. Given this really high aluminum price, is it just a matter of alumina prices or balance not being compelling, or what kind of decisions do you need to make to decide to restart in this environment?
So thanks for the question, Tim. I hope you're doing well. The first and foremost is we need some clarity around the tariff structures before we do anything with U.S. or Canadian assets or European assets. We need clarity around tariff. And then you hit upon one that is big, alumina prices. So as we look at potential, the metal price may support additional capacity in a place like Lista, especially if we can get European energy prices at a reasonable level. But really factoring in today's alumina, there's an opportunity cost of consuming alumina in a place like Lista that we can turn around and sell it at $570 a ton. So as we always do, once we get clarity around the tariffs, we'll factor in exchange rates, alumina prices, aluminum prices, and most importantly, energy prices to make a determination specifically around Lista and Warwick. Those are the two places that we have excess capacity that could be restarted.
Okay, helpful. Thank you. Also wanted to touch base on your technology initiatives as far as CapEx use. I know in the past those were a big focus, and there wasn't much emphasis in this presentation on some of the initiatives you've detailed in the past. So any update can you provide for us? Would those be kind of in line for capital uses, or are they pushed out a bit? Thanks.
So before Molly answers the numbers question, I do want to give you some insight into our thinking around our three key technology programs. ELYSIS in 2024 was a little bit of a disappointment in that it did not deliver the start of 450 KA cells in 2024. We anticipate that in 2025 we will have a 450 KA cell started, in ELYSIS. So that's the anticipation there. When I look at Australia, we're making progress in Australia. We've gone from really a desktop-sized cell to a much larger cell, not commercially sized, not by any stretch, but we are stepping up the cell size in Australia. We're doing that at the Alcoa Technical Center. And then in the refinery side, we are making progress on key technologies, for instance, electric calcination, that are promising. And so we're seeing that technology and looking at how we can apply it to our existing refineries to have a step change in both energy usage and carbon emissions. So Molly, do you want to address the dollar question?
Yeah, Tim, no, we do not have significant technology dollars. I don't have the Australia specific right handy, but I recall it's around $15 million.
And ELYSIS?
No ELYSIS CapEx.
Okay, thank you. Helpful.
The next question is from Bill Peterson with J.P. Morgan. Please go ahead.
Good afternoon. This is Bennett on for Bill. If I could circle back to San Ciprián real quick, wondering what the feedback's been from the union and workforce regarding the MOU and proposed JV. Is this at all a bottleneck moving forward?
So the MOU is really fresh, all right? And so we had meetings with our employees and informed them of the MOU, but we are also being very balanced in the discussion around the MOU. The MOU is, as I said, as I characterized it, is a real step forward in that we have support from the national and the regional governments. But there are still certain things that need to come into place in order for us to guarantee the restart of the smelter. So that's the communication that we've had with our employees and with the unions. and they've heard that directly from us at this point.
Thanks for that. And then on permitting in Western Australia, has that public comment period begun, and what are the next milestones we should watch for after that?
Go ahead, Molly.
So the public comment period, we expect to commence toward the end of the first quarter and go into the second quarter. At this point, we're still on track for our approvals in 2026, and then the mine move and access to the upgraded bauxite no earlier than 27.
Thank you. Congrats on the great quarter.
Thank you.
Thank you.
This concludes our question and answer session. I would like to turn the conference back over to Mr. Oplinger for his closing remarks.
Thanks, Gary, and thank you all for joining our call. Molly and I look forward to sharing further progress when we speak again in April. Thank you.
Okay, folks, that's the end of another earnings call. We're getting ready now for tomorrow morning. We've got 2 earnings in the morning. We've got Discover on the main channel. Sorry, I beg your pardon. We've got Union Pacific on the main channel and Discover on the extra channel. That's right. Okay, so I'm in the process of promoting that now, putting that information out and getting that done. On extra right now, we've got 24 hours, 7 days a week watching XRP. We're waiting for it to break out at any moment. We think it's going to break out. So we're watching it very closely if you want to be in with the team. That's where we're going to send you now. There's a link at the top. As this stream ends, it will take you directly into the overnight, 24 hours a day, 7 days a week extra channel where we're hearing from Sensei. He's doing some charts right now. And also you can talk 24/7 and hear what's going on. To let you know what you may have missed, let me bring you up to date. So first of all, if you look on the home page of the channel, let me refresh the screen. Some things you may have missed on the home page of the channel. As you can see, we are in Alcoa at the moment, live now. In the morning, we've got Union Pacific. There we go. Union Pacific is on the main channel here. Scroll down here. I've just put some videos out about Kinder, Alcoa, Union Pacific, and there's about to be one for Discover as well. That's about to come out. Okay, that's there on the show. It's things you may have missed. We do have some things here on the community tab, some polls you might want to vote on. Is it a buy for Union Pacific? Is it a buy for AA, what you've just been listening to, Alcoa? KMI, Kinder, is it a buy? Some polls running. J&J, we covered that this morning. Some different polls running there so you might want to tune in with. But now we're going to end by going over to the extra channel, 24/7. Keep the family together. You can always talk to each other, what's going on, listen in to all the team. And that's it from me. Can you make it louder? YouTube watcher, can you make what louder? I am coming through at 0 dB, which is the exact broadcast level. I suggest you turn your volume up or your speakers up, but I'm coming through at broadcast level. Nothing wrong with my microphone or my outputs. I'm exactly 0 dB. So if the call was lower during the live stream, that's because of their phone lines. Nothing to do with me. I can't change that. Right, let me just read the comments you're sending in at the moment. Let's have a quick look at my portfolio. Another all-time high again today. We hit 151, which was amazing. Someone said VU is going down. I'm not concerned at all. If VU is going down, that means buy more of it. Get it cheap. It will eventually go back up. Well, yes, but it's not really cheap right now. Everything's overbought because everyone's FOMO'd in. It's cheap for me because I bought it at about $100 a share less. But people now buying it, overpaying for everything. Everyone's FOMOing in with Donald Trump coming into power. VU is an ETF. Yes, it is. It's the only way you can buy the S&P. Well, there are several ways, but VU is the right one for retail investors. Thanks, Scott Crozier. Worth investing in. It looks very high in price. The price has nothing to do with it. It's got nothing to do with it. It's to do with the value of the stock, not the price of the stock. Scott, you should become a member and tune into the show, and I'll discuss that with you. The price of a stock is not the value of a stock. That is very different. It's a safe investment, much safer than doing individual stocks. That is true. Like Martyn said, I'd rather invest in something that has value. Absolutely. I'd rather buy one share of $1 million than buy billions of shares of rubbish. Absolutely right. Okay, would wait for a drop in value or just start investing now. Depends if you're already in, depends on your situation. If you become a member of the channel, you can call in and be on the show and I can talk directly to you. Procter & Gamble, a great stock, a great business like J&J. Love that. Procter & Gamble and Johnson & Johnson are my favorite stocks. Very good companies. They are excellent companies. Great time to buy J&J, particularly because of the talc litigation. Thanks, Gerardo. I'm a beginner and I only have crypto at the moment. Okay. Scott, look up brands like Procter & Gamble. Great essential. Yes, very, very good indeed. We do like that one here. It's a good business. It's a great business. I poured all my crypto to invest in Robinhood. I'd rather invest in a company that I understand, to be honest. Yes, that is very, very good idea. Only buy what you understand. Where they're bad news from Alcoa, I did not catch them. Thought they had strong results. We'll discuss the results if this video is popular. Tomorrow we can do a review of the stock. Tomorrow we're doing 2 reviews, hopefully more. I like Unilever. Unilever is another good one. Yes, you are talking about very strong businesses here. Can you make it louder? I've already answered that. Okay, it's now time to go. Thank you very much indeed. Going to send you all to the extra channel. The link is at the top of the channel, pinned to the top. Or if you want to watch XRP throughout the night and talk to your fellow investors, I'll see you back in the morning for our 2 stocks. We've got Union Pacific and Discover. That's it from me. Thank you very much indeed. We are back-to-back 4 earnings a day, plus all the live shows, plus all the news, plus the FOMC reports. We're going to be live now 15 hours a day for a month. It's a very, very busy time of the year. Time to buckle up, to make some money, put the time in, put the work in, understand what you're doing. Until next time, as always, take care of yourselves and each other. Join me now on Extra. Bye-bye for now.